This system is extremely profitable, but most people struggle just to break even. Most people in crypto do one of two things. They either hold everything and ride brutal drawdowns, or they're constantly chasing the next narrative, placing trades at random and getting chopped to pieces. In this video, I'm going to show you the system that I designed to make informed allocation decisions and consistently beat the market. I will walk you through what this system actually does, how it makes allocation decisions, and the real benefits and drawbacks of trading this way. So if you've ever wondered how to move beyond buy and hold investing, or you've ever wanted to invest in altcoins without gambling, stick around. Hey, how's it going, guys? Welcome back to the channel. Today's video is the highly requested deep dive into my asset rotation system. This video is going to get a bit technical, so if you have any questions, drop them in the comments below and I'll answer as many as I can. In this video, I'm going to talk to you about the trading experiences that led to me developing this system. I'm going to explain how the system works and why I choose to invest this way. And I'm going to show you the kind of performance I expect to receive from this system. Let's get into it. So why did I decide to develop this system? Well, during the last crypto bull market, I was using on-chain indicators to identify overbought and oversold zones. I managed to get a good entry in the DCA in zone, and I managed to get a really good exit in the DCA out zone. However, this is where the strategy started to come unstuck. Despite Bitcoin crashing over 40%, my valuation system didn't give me an oversold signal, so I missed my re-entry. I then tried my best to trade the zone of confusion using interpretive analysis, but I ended up losing about half of what I made in the period between the DCA in and DCA out zones. What I learned from this period was the valuation system was not going to be good enough. Technical analysis doesn't work, trading news events doesn't work, and macro analysis can only take you so far. I knew there must be a better way to trade crypto. If we fast forward to the bottom of the 2022 bear market, I again managed to get a very good entry by using my valuation system and macro analysis. However, this time I knew this system wasn't going to work. The market was becoming more competitive and this system was too basic. I was doing hours of research every single day, and around September 2023, I discovered algorithmic trading and trend systems. I developed 3 trend systems, one for Bitcoin, one for Ethereum, and one for Solana. But what I discovered while running these systems was that all 3 systems were giving the same signals at about the same times. If all 3 cryptocurrencies were highly correlated, then it was pointless holding all 3. I just needed to hold the one that was going up the most. This is where I discovered relative strength and developed the asset rotation system. Relative strength can be calculated by taking one asset and pricing it in another. In this example, I have taken Ethereum and I have priced it in Bitcoin. This allows us to see which asset is performing the best. If the number goes up, Ethereum is outperforming Bitcoin. If the number goes down, Bitcoin is outperforming Ethereum. I then apply a trend system to this chart, and this gives me a clear signal of which asset is outperforming. These relative strength trend systems form the basis of the asset rotation system. Okay, so now you understand the basic principle of how we can use relative strength to spot outperforming assets. Let's talk about how my personal asset rotation system works. My system starts by using trend systems on the individual assets to check if they are in a positive or negative trend. This filters out big drawdowns in the individual assets and allows me to only be exposed to the market when I have a high probability of making money. If there is one or more assets in a positive trend, the system then moves these assets onto the next phase. If none of the assets are in a positive trend, the system will keep me out of the market in cash. The next phase is the 15 relative strength trend systems. I often get asked, why so many systems? The answer to this is to help with volatile periods. When calculating relative strength between assets, the asset pair charts often have periods of high volatility. These periods are incredibly difficult to manage. Each of my 15 systems contain different indicators and are designed to work at different speeds and use different statistical measurements to avoid false signals. All of these systems work better in different market conditions. This allows me to outperform a one-system strategy. This does, however, create a unique problem. Which systems should I be allocating to and when? This is where my confidence scoring system comes into play. The confidence scoring system is a proprietary system invented by me specifically to solve this problem. The aim of the confidence scoring system is to identify which of the 15 systems are performing the best under current market conditions and gives them a confidence score based on their performance. Based on the confidence score, the system will then allocate more or less capital to each of the 15 systems. This allows me to outperform just evenly allocating capital to each of the 15 systems. This outperformance comes from the confidence scoring system combined with the 15 relative strength trend systems, allowing me to get in and out of trends faster and reducing my allocations to false signals. Once my allocation decisions have been made, these allocations then get sent to my signals table, where I'm able to act on them and place my trades. They also get sent to my equity tracking system. The equity tracking system simulates trading the allocation decisions and plots my equity curve. The equity tracking system is the most vital part of the entire system because it allows me to backtest my system and see how it would have performed in historic market conditions. Backtesting is important because it allows me to learn about how the system performs as well as allowing me to spot any major flaws in the system design. So how does this system perform? For these performance metrics, I'm going to be using Bitcoin, Ethereum and Solana as the assets I'm running the system on. If we look at the performance table, we can see that over the past 5 years, this system has done over 65,000% return with a 44.73% max drawdown. This gives me a compound annual growth rate of 265.85%, which is incredibly good. If we look at the performance ratios, we can see that this system is optimized for Sortino ratio. The high Sortino ratio means this system is optimized to be highly volatile to the upside over short periods of time rather than optimizing for Sharpe ratio, which would be optimized for smooth, consistent gains. If we look at the equity curve, we can see that this system spends a lot of its time trading sideways and not doing very much. But then during periods of high performance in the underlying assets, this system massively outperforms. This system also suffers significantly smaller drawdowns than the underlying assets, meaning you get to keep more of your profits. This in turn adds to the compounding effect. So the two main reasons this system is able to outperform Bitcoin are because of the drawdown and black swan protection from the trend systems and the exposure to high-performing altcoins through the relative strength trend systems. So let's have a look at how this affects return distributions between Bitcoin and the asset rotation system. When I export the rolling 30-day returns for Bitcoin and the asset rotation system, this is what they look like. As you can see, Bitcoin has a nice normal distribution, whereas the asset rotation system has more right-tailed outliers. When I overlay the two datasets onto one chart, you get a nice representation of where the asset rotation system makes up its performance. If we look at the negative returns, you can see that not only does Bitcoin have a greater distribution of negative returns, it also has more extreme negative returns. This is due to the trend systems within the asset rotation system, keeping me in cash when the probability of negative returns is highest. If we look at the 0% to 10% return distribution, you can see that the asset rotation system has a far higher distribution in this zone. This is due to the periods that the asset rotation system spends in cash, avoiding negative returns. During these periods, the system will make 0% returns. In this next zone, the 10% to 40% zone, we can see that Bitcoin actually outperforms the asset rotation system. There are two reasons why this is the case. Often during extremely choppy periods where there is no clear trend, Bitcoin can actually outperform the asset rotation system. The other reason is what I spoke about earlier, where I said the asset rotation system will typically do most of its performance in a short space of time. And in that short space of time, it will do extreme performance. In this next zone, the 40% to 90% zone, we can see this is where the asset rotation system begins to outperform, while Bitcoin struggles to keep up. The outperformance in this zone comes from exposure to altcoins, which are higher beta and typically outperform Bitcoin in positive trending periods. And finally, the 90% to over 100% zone. This is the zone where the majority of the outperformance comes from. This is the zone of outliers. Bitcoin just simply can't compete with this zone. The over 100% zone is where I received the crazy returns I spoke about earlier. In this zone, I can quite easily double or even triple my portfolio in a very short space of time. This is not some get-rich-quick scheme where extreme returns are promised over short time horizons or with very little effort. As you can see from the return distributions, most of my time is not spent in this zone. But by trading this system over many years, I put myself in a position where I can be exposed to these kind of returns when they do happen. So you've heard why this system is good, but what are the bad bits? Okay, so the biggest drawback to this system is that it has to be run every day at market close. Why is that a drawback? Well, here in the UK, crypto bar close is at midnight or 1 AM, depending on the time of year. This can really mess with your sleep schedule, but personally, I think the rewards are worth the lifestyle adjustments. The second drawback is something we have spoken about already. This is the amount of time that this system spends trading sideways. If you are someone looking for consistent returns or someone who gets bored easily, you are probably not going to want to trade this system. Personally, I am very patient, and I am willing to wait months or years for this system to play out, but that is not for everyone. Some people have different investing goals and different time horizons. The third and final drawback to this system is how complex it is to develop. I have spent well over a year of my life now researching and developing this system, and there are still things I would like to improve on. There is very limited information out there about developing algorithmic systems, and most of it isn't very good. Right now I'm working on putting everything I have learned into a course so that you guys can build systems similar to this one. Having all this information in one place would have been a game changer for me, so hopefully this will help you guys. So that's the deep dive into how I manage my crypto portfolio using my asset rotation system. I hope you guys found some value in this video, and I hope this helps to answer some of the common questions I get about this system. If you've got any questions, drop them in the comments down below, and I will respond to as many as I can. If you enjoyed the video, make sure you give it a like, as it really helps with the YouTube algorithm. I have lots of interesting videos planned, so make sure you subscribe and turn on post notifications so you don't miss out. Thank you for watching, and I'll see you in the next one.